Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project Podcast. I'm your host, Steve Fierros. Glad to join you guys today and bring on Mark Willis. Got him on the show today. So Mark is a certified financial planner. What he does is, he's a man on a mission, right? So he wants to help you as an individual, as an investor, or somebody who's just thinking about their future. Think differently about your money, your personal economy, your future, all those different things that are necessary, especially in today's environment, right? We've got inflation going on. We've got a crazy kind of global economy, global politics kind of stuff happening. So thinking about your future, planning for your future, more important than ever. So excited to have Mark on. He's a 3-time best-selling author. So we know he's going to be dropping plenty of wisdom on us with his experience, of course, with other clients and then personal experience. He's based out of Chicago. So if you're there locally, of course, you want to reach out and connect with him. He's also co-host of a Not Your Average Financial podcast. So we'll make sure to put a link to his show so you can check out his podcast as well in the show notes. But yeah, Mark, glad to have you on. Welcome to the show.
Thanks, Steve. Glad to be on.
Yeah. So those of our audience that may not be, familiar with you beyond just that quick snapshot in the bio, tell us a little bit about yourself, your journey into, helping clients to your investing journey, share with us a little bit about kind of your background and your story.
Money was not something I really had a lot of awareness of growing up. My first memory of money is a funny story. So I'll start way back, further back than you probably expected. I was like 5 or 6 years old, I guess. And I somehow collected about $50 from allowance and lemonade stands, that sort of thing. And my mom thought it was right to go ahead and, hey, take your little boy down to the bank and open up a savings account with your $50. And I had all my money basically in a little paper bag where I just left it in my drawer, like all of us kids, right? We just had our money wherever we could put it. And anyway, so I bring my hard-earned money, like my life savings, into this weird building. And my job was to basically hand it over to a complete stranger, some guy in a suit, and then never see it again. What kind of shakedown is this? I didn't trust this banker, right? And little did I know how my distrust of banks would inform my overall career. I didn't go to school for finance, but I quickly realized that finance took me to school because I basically went to school on student loans. And I graduated with my wife and I, our degrees between us, 3 private school degrees, landed us in 2008 with $120,000 of student loan debt and no jobs, right? And no plan, worse off, no plan to pay off the debt, Steve. So it was sort of a great start in the right direction. Again, in 2008, when everyone was just ready to hire us and, not exactly. So we had to get scrappy and we had to figure out how we could not just get debt free. We didn't just want to be debt free. We wanted to turn our debt into real wealth. We wanted to turn around the table, right? We wanted to take the punch coming at us, the student loan punch. I call it my other wife I married. I married 2 women in college, my wife and then Sally Mae also seemed to be attached to me at the hip. So we wanted to take the problem of our debt and turn it into a solution, which actually is where Bank on Yourself became one of our key strategies, not just for my wife and I, but then for our financial firm that we started around the same time.
Awesome. I think that's a very real current scenario for a lot of people. We've got, massive levels of student debt, right? I know that's a hot topic, right? With the, current administration, right? Forgiving the student debt, right? And I know that saddled a lot of people, kind of in our current environment. So that's huge, So I think finding a solution to that problem is super, wise of you. And it sounds like you guys have some solutions. So Bank on Yourself. Tell me a little bit about that. What is this a strategy? Is this a program? What is that? Because that sounds pretty cool.
Well, it does sound cool, right? To think about banking on yourself. How can I do that? How could I fire my banker and become my own source of financing? I believe that, and this is as a CFP now, but as a CFP, I'm now convinced that who controls the banking function in your life will win the game. End of story. right? I don't care. I don't care as much anyway. I don't care as much how you did on your mutual funds or even how your cap rates are doing on your real estate. What matters more to me is who is in control of the banking function in your life, because we're all participating in the banking business. Whether you're a real estate investor or a doctor or just some other busy professional, you're in the banking business too. And that's true if you've got a mortgage, if you've got a student loan, if you've got credit cards, that's all fine. We understand that. We are products of the banking. We are the ones that are giving the profits to these banks. But even if you're one of the rare ones that pay cash for everything, I'm here to tell you that you're still playing the banker's game. And here's why. You put $1,000 in a savings account. Steve, let's say you've got $1,000 and you put it in your savings account this afternoon. What do they do with that money? Do they just put it in like a shoebox in the back of the bank? Or what are they doing with that money?
Yep, it's going out and working for them.
That's right. Yeah. And how much interest did they give you for your hard-earned $1,000, right?
This is what cracks me up. I get a mail the other day, right? And this is frequent, right? I'm sure you see this. Should leverage this if you haven't. But it's like, deposit your money with us and our bank and our high yield savings account. And then you look at what they're paying out for a savings account, and it's an absolute joke. And it's like, this is the high yield version,
right?
What's the what's the standard?
Oh yeah. Version? Oh, it's like so many things, like low fat peanut butter, right? It's totally anathema, right? It's like glow in the dark sunglasses. Like, why would you even have those? It's like a doorless microwave. Right? Why would you have a doorless microwave? It's sort of like the high yielding savings accounts are really just, it's almost like they're mocking us, right? These bankers.
Totally.
So I'm with you all the way on that, man. And then what do? They give you 0.0 nothing percent, and then they loan it to the guy behind you in line for 10% or 18%. This is your money. So this is a truly infinite return for banks if you stop and do the math on that. Okay. So even if you're a cash only buyer, I'm still proposing that you finance everything you buy. Even if you pay cash, you're still financing it. Even if you don't take my word for the whole fractional reserve banking that we just walked through right there just a minute ago, forget about all that and just think about the truth that you finance it from your future self. When you pay cash for something, you're losing the opportunity to let that money grow for you ever again. You're financing it from your future self. In other words, either you pay interest to a bank.
Ramsey's wrong?
Yeah. Yeah. It took me a minute. It took me 7 months to come to that conclusion, man. But yeah, as it happens, he doesn't have a corner on truth. Dave Ramsey doesn't know. He didn't bring his financial peace, didn't come down from Mount Sinai. So, I'm just blown away that it didn't catch me sooner. But as I was paying off all these debts, remember, you either finance it through another bank, or you pass up interest you could have earned on your money had you left the money invested. So compound interest stops as soon as you write that check for that car or that real estate deal or whatever it is that you're doing. And then we're back to zero and we have to start saving our money again slowly thereafter. And so that to me was a insurmountable problem. This problem of always breaking compound growth or always paying compound interest to the banks and their cronies, like Capital One and Sallie Mae and all these banks. So this is the conundrum that leaves most of us enslaved to the banking system. You asked, what is bank on yourself? I'm finally going to answer your question, man. I promise I'll try to keep this brief. All right. So I'm going through my CFP training. I'm trying to kind of understand everything from index funds to, real estate strategies to dynastic trusts to everything, soup to nuts. And there are 450 plus financial parking spots where you can put your money. You combine those together into different portfolios. You got infinite places you can put your money. And it was overwhelming just learning about it. And much less, it was intimidating to actually enact that for my own financial life. I mean, think about that. What if you choose the wrong bucket of, mutual funds or whatever, or you get into a 401k you can't touch for 40 years? This was, sort of the presentation I was being given as I was reading through my CFP stuff. Anyway, so I started I said, let's get rid of the labels. Let's just start writing a list of all the things that I want my money doing for me. Like forget 401k, forget savings account. Let me just write down the function of my money. Liquidity. I want liquidity. I want access to my money. Guarantees. I want to make sure that money is guaranteed, going to be there for me when I go to look for it because I need that when I need it. I want it to have a competitive rate of return. I don't want it to be beat up due to inflation. I want it to be accessible, no taxes due, no penalties. Nobody's going to ask me any questions. It's my money, not the government's, not the banks. I want to be able to access it with no penalties and taxes. I also want it to be hidden from lawsuits and creditors. And so I'm trying to make my list. And I didn't care if it was legal at that point. I'm just trying to think, all right, what's my favorite things that I want my money doing for me, right? As it happens, of all things in the financial universe, Steve, a dividend-paying whole life insurance policy meets every requirement that I was looking for. Everything I just listed there, tax-free access to money, guaranteed to grow every single year. I can use it like a bank, all right? And when I access it, I can borrow against it as collateral, okay? And I can leverage that asset. The whole life insurance policy has an asset called cash value inside of it. And I can borrow against it and pay cash for the car or the down payment for my next real estate deal or investing in a syndication fund. And when I do that, when I borrow against the policy, it will continue to grow as if I had not touched the money. And so in that way, I don't break compound growth. When I make a purchase, let's say I got 100 grand in my policy, one of my policies, and I borrow out 60 grand to invest with you or to just put anywhere, buy a car, buy some real estate, invest in a syndication fund, whatever. That year, my policy will still be earning interest and dividends on the entire $100,000. And my money is hopefully getting some yield in the real estate deal. And so in this way, I've got my money doing two things at once. Mm-hmm. And so with Bank on Yourself, I really see it's sort of the greatest parking spot for my cash to live in between my deals. And that's how I ended up paying off my student loans. It's how we pay for our taxes every year. It's how we invest for our real estate and other projects. And it's one of the most important parts of my financial life at this point. So that's the longest answer you probably were looking for there, Steve. But any feedback on Bank on Yourself?
Yeah, no, I mean, I'm familiar with kind of the concept, right? We've kind of dove into it before, but for some of the other people that are like our listeners that may not be familiar with it, because you're going to have people, and I'm sure you run into it all the time, just through your personal business. They're like, wait a minute, life insurance, I know that that's good for me, and my family and my kids, heirs, whoever, if I die. But this is a product that now allows me to take advantage of the policy itself, the wealth, or the creation of it, the assets that I hold while I'm actually still living. And that's kind of what you're telling me, right? So
yeah, think of your house. Most people might be homeowners listening to this show. You live in that house, and that's one use of the asset. Mm-hmm. But you can also get a HELOC against your house, right? And that HELOC can now be used for all your many other things. Send your kid to college, invest in some real estate. You're still living in the house. So there's still a death benefit associated with this life insurance policy, but there's also a living benefit called cash value, and you can access it like a HELOC. You can borrow against it, pay it back, borrow against it, pay it back. And like a HELOC, the policy will keep growing, just like your house keeps growing. When you borrow against your HELOC, Zillow doesn't care if you have a mortgage or a HELOC, right? The house is still growing as if you never touched the money. You're just using your house as collateral. Same thing with the policy. We're just borrowing against the policy. The difference is houses don't grow guaranteed, Steve. Life insurance does. And a HELOC, another difference, a HELOC can be taken away from us. A banker, Mark Twain says, a banker is a fellow who will lend you his umbrella when the sun shines, but wants it back as soon as it starts to rain, right? So on a whole life policy, it's baked right into your contract. Your rights to borrow cannot be taken away from you. And so in this way, you've got a permanent line of credit that's guaranteed to increase in value for the rest of your life. Not my guarantee, it's the insurance company's guarantee. Mm-hmm. And it can't be taken away. So that to me gives me a sense of peace, saying, hey, all right, yeah, the life insurance, it's going to be there. That's great. But you know what? It's more fun to spend money while I'm on this side of the grass. So by using the policy's cash value, it's a tool that I can use then for all my other real estate needs.
Yep. No, and it's powerful. And I've heard other people kind of speak on the concept and whatnot as well, infinite banking and whatnot, because I know some of the people would be familiar with the concept through that kind of name. Super, super powerful. And this is what I've learned. Let's say the ultra wealthy is like, well, you're not selling your assets to stay afloat, right? Because at some point, we all want to stop working, let's say, or working for a living, right? If you enjoy what you do, awesome, do what you do. But, I think for most people, they want to be able to leverage the things that they've actually the assets that they've been able to acquire, right? And you're effectively considering it an asset because you're able to leverage that, borrow against it. You don't deplete it. And then, of course, you have the additional added benefit of, well, it actually, once you do pass on, it's going to pay for, let's say outstanding debts or, whatever. You're still going to have a value there in the policy itself. It still has the death benefit, right? Mm-hmm. So it's kind of a level up.
And our job would be to cut down the death benefit by about a half to 2/3, make it as small and as tight as possible. The smaller you make that policy's death benefit, the lower the expenses, the less the commissions, quite candidly, and the more cash you get right away in the first month. Now, Steve, you're right. Other people call it by different names, and you guys go on to YouTube or podcast searches, whatever, you're going to find thousands of episodes using phrases like infinite banking and family wealth banking and private wealth family, 7702 reserve banking. There's infinite ways that folks have referred to this. The reason why I became a bank on yourself professional, and there are only 200 of us that have that credential in the United States and Canada. But the reason why I went through that process, it took me about 3.5 years to get that credential and to really become proficient in this concept, is because there's so many knockoffs, is I guess one way to say it. You ever heard of Kleenex? Ever heard of Xerox? If there's too much, if there's no delineation in the phrase, I've met people who thought they had a bank on yourself designed, well, they called it many things, infinite banking. They thought they had one of these policies, and it came to find out it was riddled with expenses. It was going to be taxable for them. It was, going to probably be tied to, say, a market index or worse, a heavily feed mutual fund sub-account. And they didn't realize it. Just yesterday, I was talking to a guy, he's putting in almost $200,000 a year into 3 policies. And there's no special rider on those policies called paid up additions. He thought that he had one of these special policies designed a certain way. And, the way I kind of liken it to is, if you've ever had USDA organic food, and then right next to that at the grocery store is the all natural version, there is no regulation on the word all natural. But if you get the USDA seal that it's gone through 30 things, right? 30 different hoops to jump through to get that seal. That's what Bank on Yourself is. It's a trademarked IP with a credentialed process for only specific financial professionals who can hold that seal of approval, so to speak. And that's why I'm with that group. So you know what you're getting when you get one of the Bank on Yourself designed policies. That's my asterisk there. Yeah,
no. And that's super helpful because just like you said, right? Like a lot of people would have been familiar with, let's say, the concept itself, or, heard about it in some capacity, right? Like, especially once you kind of come into the investment arena.
Absolutely.
And I've definitely heard like that as a caveat, having a poorly designed or incorrectly designed policy, like it's absolutely vital. You cannot just grab, hey, you know what? I got, my guy who writes my normal or my life insurance policies, term life or whatever. And, you're trying to explain to him what this is and kind of how it needs to be set up. And it's like, no. You're going about it wrong. You need somebody who absolutely knows what they're doing. Because if not, it's going to be horribly expensive, incredibly inefficient. You will not get, what you need. Thanks for
that's actually a really good. Yeah, that's actually a really good point. I looked it up. There are over 400,000 life insurance agents in the United States. 400,000. That's one for every 800 Americans, which is why, most people had their cousin reach out to them to try to get them to buy one of his life insurance policies, right? A long time ago. If there were 400,000 elevator technicians in this country, would you get on any elevator? I wouldn't. I would want to make sure there was like a seal saying, hey, this is a credentialed, absolutely like service technician who's watching this thing, who's making sure it's built correctly, engineered from the ground up to be safe to get into.
Right.
If you want to do that with your elevators, make sure you're doing it with your money. It's just really important. So way to go, Steve, for looking into that, man. Great.
No, I like I said, I've just heard kind of like that kind of I would say horror stories, but this is something that's not going to be happening overnight. This is something that you're going to need to build and grow over an extended period of time. And the last thing you want to hear is, hey man, I'm 30 years into paying into this policy, or 20 years, whatever, having spent, tens of hundreds of thousands of dollars potentially, only to find out it's designed incorrectly. It's designed poorly. It's not going to fit your needs.
But if you're in the right elevator, you just push a button and up you go. It's not like you have to stress about it for the rest of your life. Once you've got the policy designed correctly and you've got someone who's servicing it for you, who's got the credentials, it just works. It's kind of like my smartphone. I know I just have to swipe and the thing works. It's not like I have to constantly be stressing about, hey, does the camera still work? Is this thing about to fall apart? If it was designed properly from the get-go, it's just going to work. So anyway, and that's sort of been my experience with this over 12 years now of having these policies myself and offering it to now clients around the country. It's one of the simplest, easiest parts of their financial life. Yeah, they're still investing. They're taking the money from their policy to put in different projects, their businesses, their kids' college, and so forth. But it just gives them, sort of a parking space, like, to bring the money back home to before they send it out again.
Yeah, no, it's very powerful, very powerful. Now, I'm kind of curious. Obviously, like crypto assets and like Bitcoin specifically. I mean, that's something I personally invest in. I know, like multiple of my partners do as well. Is that something I can kind of incorporate into this? Can that fit at all into this type of strategy? Like, if so, like how does that work? Like, I mean, just curious.
Yeah,
I love Bitcoin conference going on right now, so that'll kind of date when we're filming. But I know that's going on in Florida right now. So, But hot topic, obviously, absolutely, the last few years.
Biggest one ever. They keep getting bigger. They keep spending more money on it. So somebody's coming up with that money. I don't know if they're paying for it with Bitcoin or what, but
life insurance.
Yeah, there you go, man. Right on. Yeah, maybe so. The short answer is life insurance companies are going to be just kind of toeing the line on using traditional assets to get fixed income for their book of business, and that produces yield, guaranteed cash accumulation, and dividends for the policies in U.S. dollars usually. But one thing that's kind of interesting, I like how Robert Kiyosaki says, there's three sides to every coin. You heard of this, right? There's heads, there's tails, and then there's the edge. Play the edge, and you can win either way. This is how I understand crypto, and this is how a lot of our clients, some at that conference right now, as we're recording this, use their policy. So let's say that you chose the best coin that's going to rocket ship to the moon. Borrowing from your policy is better than just paying US dollars directly for that, coin investment, whatever. Why? Because if the policy is going to continue to earn interest and growth and dividends, you can get the growth of your policy and get the upside appreciation of the coin, the speculation, whatever you want to call it. And that's awesome because that increases your yield without any additional market risk. In fact, if you're really nerdy, there's something called the efficient market frontier, where the more safe money you have on one side of the barbell, the more speculation and investment you can make on the other side of the barbell. And if you can weigh those properly, you can actually lift a lot more. You can get a lot more return for a lot less risk, a lot less standard deviation or beta there. So that's actually one interesting philosophy. But what if the coin crashes? What if you chose poorly? All right. Well, at least it sucks to not have, the rocket ship coin, but at least you still have the growth and dividends on your whole life policy as if you had chosen no investment at all. The policy is going to continue to grow as if you'd never touched a dime of the money in that policy. Now, you still pay back that loan over time. If you don't, there's nobody who's going to come and like repo your house or anything. It's just deducted from your death benefit when you pass away. But over time, if you pay off that loan to yourself, now you've still got the policy earning as if you hadn't made that mistake with the wrong coin. So you can try again. So to me, it's sort of a way to play both sides, and at least you're going to get the growth of the policy, if not a lot more, if you chose the right, the right crypto coin.
Yeah, no, that's, like I said, it's really powerful, and that's a great hedge, right? I mean, because it's, eventually that's what we want to do, right? We want to build enough assets where, okay, well, we're just managing risk. You want to be able to capture the upside, but you always want to, it's always about preservation of capital. We don't want to lose. Nobody likes losing, especially, if you've built up something, quite significant. Well, I honestly feel like we could, spend a ton of time on this. And like I said, we'll probably have to have you back on at some point. But I want to transition at this point in the show to, kind of the tail end of it. We would have a fire round. Just going to fire you off some kind of just simple, straightforward questions. You ready?
Let's do it. Yeah.
All right. So first question is, what is the best book that you recommend, other than Rich Dad, Poor Dad? I mean, you quoted Kiyosaki there, but I'm sure you got a ton of books, and it sounds like you having to have done so much research and planning and all that kind of stuff. And you seem like the kind of guy. I see some books there on your shelf behind you. So
yeah,
you seem like the kind of guy that's constantly studying. So yeah, what's your best book recommendation?
It's hard to pick one. I'll say, there's a great book out there. The best one on this topic that we've been discussing today is called The Bank on Yourself Revolution by Pamela Yellen, a New York Times bestselling author. She gets into the costs and the downsides of this as much as the upsides, because guys, there's no perfect anything out there. So you want to go in with your eyes wide open. So I'd choose that book. If you had to give me one other book, I'd say check out for business management, check out The Road Less Stupid by Keith Cunningham. Great book for helping you with hiring or management, that sort of thing.
Gotcha. That's good. I don't think I've heard that one before. I like the title though.
Yeah, me too.
That's all we need. We need that sometimes. We all need a little less stupid in our lives.
That's right. So. That's right.
What's your next question? What would you consider as your superpower?
Well, I think people have told me that somehow I can get laser focused on a goal, help other people achieve theirs, work on it daily, weekly, monthly, quarterly, yearly, that sort of thing. And so helping other people hit their targets, coaching and so forth, that's been a lot of fun for me. And they tell me that's something I seem to be gifted at. Thank God. So that's been mine. That's
awesome. I mean, you're in the right position. If you're, helping people and that is a gift of yours, then yeah, absolutely. You're in the right spot. So yeah. Okay.
And I took my daughter to a trampoline park and she and I were both jumping pretty high. So maybe that's our superpower too. So, yep.
I love it when you can share it with family, right?
That's right, man. That's right.
What is the biggest lesson that you've learned over your career? And this could be, I know we didn't get a chance to talk too much about like your personal investing experience, but like, let's say you're, as a CFP, but it could also be investing. What do you think that your kind of biggest lesson that you've, Jim, that you've mined?
People are the best doorways to a fulfilling life. And that true wealth comes from your Rolodex, not your, net worth statement. So people people you have relationships with, kind goodness in your relationships and friendships with others. That's been a great lesson. And it's true. Many times the doorways to the best return on investment, like financially speaking, is through great friends who are great return on friendship, whatever that means, right? So given that you can have better friends and a better financial life, I say invest in your friendships.
That's great too, because I feel like that's playing the edge of the coin, because it's not an either or, right? It's together and it's you get the benefit of the friendship and those relationships, those connections lead to so many other things, right? So either way you win. So
that's right. Yeah.
No, so that's great. And then for the busy working professional, working towards financial freedom, what advice do you have? What kind of practical advice can you give to them?
Figure out what you want, because the world is going to tell you what you need to have. And, I'd say don't listen to what banks are telling you to do with your money. Instead, watch what they're doing and go do that instead. Guys, if you're bored to tears at some point as a busy professional, probably not often, right? But if you're ever bored to tears, just search for the words bank-owned life insurance, BOLI, bank-owned life insurance, and find out, like I did, that they have hundreds and hundreds and hundreds of billions of dollars wrapped up in these bank on yourself designed life insurance policies, whole life insurance on their key executives. So do that research, but ask yourself that list of questions like I did. What do you truly want your money doing for you? Is it tax free or is it tax deferred? Is it guaranteed or is it all at risk? That sort of thing. Make that list for yourself before you put labels on where your money goes and so forth. That's my quick advice.
Yeah, that's awesome. That's great advice. And, if our audience members or listeners who want to get in touch with you, what's the best way for them to be able to do it? Because I'm sure there's going to be a bunch of them that want to kind of explore a little bit more and dive in a little bit deeper to the things that you're talking about.
Steve, I think the very best way folks can find us is at notyouraverageFinancialPodcast.com. That's our podcast name. It's our website, notyouraverageFinancialPodcast.com. If you go to that site, there's a big fat button that says request a meeting. Click that. We can have a 10, 15-minute phone call, answer your questions, get to know you a bit, see if this strategy or other strategies would be a good fit.
Awesome. Well, Mark, it's been a pleasure having you on the show. Like I said, I think we'll have to have you back on in the future at some point. And thanks so much for hopping on with us and sharing your wisdom and your insight. I hope you're having an awesome day. All right. We'll talk to you.
Thanks.
Talk to you soon.
Thank
Aloha.
you. Aloha.
Well, what a great episode with Mark and him sharing about the bank on yourself concept. What a great way to, be able to leverage, the assets, the wealth that you've been able to generate. Not have to spend them to, let's say fund a lifestyle, things as simple as, buying a car or paying for your kids' college, or maybe even buying another investment property. I mean, this is a multi-pronged approach. So he had some great wisdom and insight to share in regards to that. I also love that, his take on like being able to use the life insurance to be able to buy real estate, to buy Bitcoin. I mean, even just kind of a forward-thinking person, selling insurance, life insurance. I know a lot of people will just sell policies, and I get it. I mean, we're all in, a lot of people are in sales, and taking nothing away from them, but just seeing that the way that the world and our economic future is looking, you want to be able to consider all different avenues, whatever's going to work best for you. So he gave us some great recommendations, some book recommendations too. I like that. The Road Less Stupid. Great title. I'll have to look into that in terms of business operations. So I like that. And really just, he had a great quote from Robert Kiyosaki, talking about the three-sided coin, effectively, not just going with heads or tails, but playing the edge. And that way you win no matter what. And again, this comes back to leveraging of the asset versus having to sell it. It's not a simple win-lose. It's a win-win. And I love that concept, love that idea. And that's what, honestly, that's where we all want to be. Right. So if you want to, if you're interested in investing with us, obviously we've got a bunch of action going on in terms of investment. There's always projects going on. If you're investing, go check out our site, tricityequity.com, to learn more and how you can connect with what we've got going on, the projects that we've got going on. Connect with like-minded investors. Of course, join our Facebook group if you haven't joined already. Our Facebook group, Honolulu Multifamily and More. We're transitioning back more now to in-person meetups. So if you're here local, here on Oahu, we'd love to be able to meet up with you. We're going to be continuing to do that every month. For those months that we can't meet in person, we're still continuing on with our virtual meetup. So make sure that you're joining the group to be able to connect with people. Even if you're not local, it's a great place to network. Plenty of people who are there who are seeking success, especially through real estate in general, but specifically our focus is multifamily. If you found value in the podcast, of course, please go leave a review. We'd love a 5-star review from you, from Apple Podcast, Spotify, or wherever you're finding our podcast. And if you know anybody who might resonate with the show itself, please feel free to share it with them. Share it with them if they've had anybody asking about life insurance, or maybe other ways that they can leverage assets. I think it'd be a great episode for them to listen to. And of course, we're still gearing up for our conference coming up in July 21st to the 24th. That is here in Ko'olina on Oahu, on the beautiful island of Oahu. So still having ticket sales ongoing. The Hawaii Millionaire Mindset Conference entitled The Blueprint. So it's going to be an awesome time of networking, of learning, about business, entrepreneurship, real estate, the different vehicles that you can use to better yourself, better your financial future, your family, generational wealth, all that awesome stuff. So we're going to have networking, training. So it's going to be an awesome time. So we're excited to have you guys out. So make sure you're checking out the site, millionairemindsetblueprint.com. It's going to be in the show notes. So make sure that you're hopping on, get your tickets. We are getting close to being half sold out at this point. So we know that's going to continue to go even faster, the closer that we come up. Again, that's July 21st through the 24th. So make sure you're booking your spot as well. The hotels and the Airbnb units are all booking up quickly. So if you're going to come out from, the mainland or somewhere else, international or whatever, make sure that you're hopping on, getting your tickets. And if you're local, of course, we'd love to see you out. So All right, guys. Well, that's going to be it for this week's show. Look forward to seeing you on the next episode. We love you guys. Go take some action, and we'll see you next time. Aloha.